think the Etihad Credit Bureau was long awaited for, and it's been, 2 years almost that they're in the country, and I think it's been incredible from a banking perspective. Finally, there is an ability for a lot of the banks to be able to look at every single person's individual records, especially the credit report, which is what you need incredibly to understand whether somebody is creditworthy or not. And then since the outcome of the credit bureau, 2013, when they came, or 2014, I think there's been a lot of applications more and more declined by different banks. Now they actually know who's creditworthy and who's not. There is, however, a whole lot of people who are kind of trapped in a situation where every single market you go to, the implementation of a credit bureau will actually bring an adaptation period where people used to get loaned by kind of hiding the other loans they had, and they kept getting another loan to repay the loan. And so they went into this cycle of never being caught into over-indebtedness and not being able to pay them back because they keep going on. Now that the credit bureau is here, they can't get any more loans, which means there's a whole bunch of people trapped into this area of, well, I can't consolidate my loan anymore. I can't take extra loan to cover the previous loans, which is how the market should be. The market should be in a way where it is protecting the consumer from not taking above a certain level of debt in the country. So it is for the future. You only start seeing the impact of a credit bureau a couple of years, 3, 4, 5 years down the track. And I think in the next 10 years, the country is well set from a banking services industry. But yes, the adaptation is extremely painful for people and for banks, because the banks now are starting to realize who they gave out loans to 2, 3 years ago, how much of their monthly repayment is going already into monthly repayments. The interest rates have already gone up by 25 basis points since the beginning of the year. And so the fact that the UAE dirham is pegged to the dollar, we actually follow a lot of the Fed's monetary policy. Now, analysts in the market think that interest rates are going to go up twice. There's going to be a raise for another 0.5%, so 50 basis points, divided into two, either between July or September. So there is an expectations from analysts out there that there will be another raise. So therefore, that would actually put pressure on the IBOR. The IBOR will go up. What does that mean? Eventually, for the UAE, that means your variable mortgage rate will actually go up by 50 basis points. Now, if you took a mortgage in the last 2, 3 years and you've always bet on what the IBOR was last year, then you need to start thinking that your repayments on your mortgage will actually go up. And I think there is a certain level of education from a lot of banks to let people know if that's the outcome for this year, and that's the expectation for this year to go up by 50 basis points, people need to understand the impact on their mortgage. Now, that's what the analysts think that the Fed's going to do. The market believes, however, there is potentially only one rate increase. Talking to quite a few of the analysts at Emirates and BD and different banks, what I understand from them, though, is the market is actually pricing in only one raise in rates, which is going to be better for the consumer, of course. But no matter what, they're expecting to have increase in the level of interest rates by the end of the year.